For Green Dragon Gas, 2015 has all been about building production and revenues. And broker Cantor Fitzgerald says the gas producer continues to show both financial and operational success. Well, it's involved in the production of coal bed methane gas and its distribution and sale in China. Well, Randeep Grewal, chairman and founder of Green Dragon Gas, joins us now. Now, Randeep, many investors spooked by any China associated stocks. However, the International Monetary Fund just yesterday saying the Chinese economy is undergoing a major transition from export-led growth to a model increasingly driven by consumption and services. So does that bode well for you?
Well, it sure does. And we've been saying that for a while, that as the Chinese economy has grown exponentially over the last 15 odd years, it's natural that the very large middle class coming on stream has its own domestic consumption requirements. And for Green Dragon Gas, we are exclusively a Chinese domestic gas producer. All of this is a wonderful blessing for us.
So you would not be impacted at all by the Chinese yuan devaluation, because that would affect domestic users too, surely.
That's correct. Regardless of the changes in RMB, we're a domestic producer. We get paid domestically. We consume domestically, so we're very well sheltered away from that devaluation.
Okay, so you've got this proprietary lithobrick technology. You've embarked on a 30-plus well drilling program. Now, 18 wells were drilled in the first half. You were on course for drilling 14 in the second half of this year. Are you still on track for that figure?
So far, so good. Barring any changes in weather, that sometimes we get harsh winters, so it's uncertain how this winter is going to look. But so far, so good. We are on track on the drilling program, on track with our forecasted production exiting this coming year end. It's a very exciting year for us in what is otherwise a tough commodities market for many others.
Okay, I'm just wondering how deep your pockets are, though, because I know that you've been investing heavily in infrastructure. This is crucial because it allows you to get the gas to the market quicker. But has this impacted your cash reserves, this major investment?
So fortunately, the way our deals have been structured and specifically what we negotiated with our partners, in this case specifically CNOOC, and CUCBM, which is our Chinese state-owned enterprises that we partner with on our commercial block, GSS. They're spending in excess of about $200 million over the last couple of years, completing out the core infrastructure, which we're able to utilize to take our gas to market. So that infrastructure investment, which while significant, isn't something that we've got to come out of pocket with. Our capital is being spent exclusively on drilling incremental wells versus having to build infrastructure to take the gas to market. So when it comes to our balance sheet, it's quite discretionary. All of this capital being spent is growth capital. We've got over 2,000 odd wells that have already been drilled with a $1.3 billion US of capital spent. It's now about putting those wells on production, completing the infrastructure, and taking that gas to market.
Okay, now you did mention your flagship GSS block. I understand that you own 60% of that, which is significant and attractive to partners. So I suppose the question to ask is, which companies are interested in a farm-in relationship with you?
Well, we are having several discussions regarding personnel and people and companies interested in farm-ins, but we wouldn't be entertaining anything, as you correctly said, on our flagship and commercial block, GSS, which is where we've spent most of our almost 20 years now developing. We are, however, open to ideas on some of our other 6 exploration blocks in terms of bringing parties to the table who wish to cooperate with us in turning those exploration blocks into the next GSS.
Okay. Now, 2014 was your transition year. As I've said earlier, 2015, you've reaped the rewards of that transitional year. But your shares, yesterday were at a 52-week low. What would you say to investors who perhaps are still a little bit sceptical about the Chinese association?
Well, I think if anyone's skeptical to the Chinese association, I would say I'm not sure which other place you can get a more stable government, a more consistent performer, a growth economy, a booming economy, stable gas prices that in this down cycle from a commodity standpoint, Green Dragon gas still gets paid $10 to $12 an MCF at the wellhead. So we've got all the indices, all the boxes one can check of great shelter, great economics, well-defined growth plans over the next 5 years. I feel without a question, Green Dragon gas is the only place a energy investor can shelter its capital, and anyone that's looking for whether it's emerging market, Chinese exposure, or energy exposure, Green Dragon gas is the only main market listed company one should be looking at. So yes, we are disgusted with the share price, but that doesn't deter us in any way from an operational perspective, where our entire focus is on monetizing the last 20-odd years of efforts we've put together. This is the inflection point for us. And we're very excited looking at 215 coming to an end and looking forward to a very exciting 216.
So Randeep, you say that you're disgusted with the share price. I understand you're also disgusted with market commentators who lump gas producers in with oil companies because you don't like being lumped together with the price of Brent crude oil, do you?
But quite similar to, yes, I am disgusted when people use the word oil and gas, and I challenge those same personnel to use the word oil and coal. Oil is as similar to coal as gas is to oil in every regard. Yes, they're all energy sources, but the consumer, the type of consumption, where it is being consumed is completely different. Specifically, if we were to rally all the experts in the energy markets and ask them to forecast what Brent might do over the next 10 to 15 years, they are divergent views, but when people talk about natural gas, they are convergent views. People have a clear view of what the gas price looks like, where the booming consumer is, which is predominantly in Asia, and what that gas price needs to be for that consumption to continue to rise. It's a clean source of energy, and it is a new consumer who's adding the gas molecule to himself, growing in a clean energy, a clean environment for oil, for gas, its power, its heat, and its transport. Each of those coming from natural gas is a lot cleaner than coming from oil. So regardless whether Brent goes to 10, 25, or goes back up to 100, gas markets are very independent of what takes place with Brent.
Randeep Grewal, founder and chairman of Green Dragon Gas. Thank you very much indeed for joining us.
Sarah, thank you.